I was sitting at my kitchen table in my Scottsdale, Arizona townhouse, reviewing what I thought would be routine HOA documents when my blood ran cold. The insurance policy declaration page showed an effective date from 2 years ago with a giant red stamp across it reading, "Non-renewed." My hands started shaking as I flipped through the rest of the packet, desperately searching for a current policy. There was nothing. Our entire community of 87 homes had been operating without liability insurance for 24 months, and apparently, I was the first homeowner to notice. My name is Marcus Chen, and I had lived in the Saguaro Hills community for 6 years. I am an accountant by trade, which meant I actually read the fine print on things, unlike most people. The HOA board had recently sent out a mass email requesting volunteers to serve on a finance committee, and being the responsible guy that I am, I had raised my hand. They sent me a digital folder of documents to review before our first meeting, which was scheduled for next week. Buried in that folder, between budget spreadsheets and vendor contracts, was that damning insurance document. I immediately called my neighbor Tom Rodriguez, who had served on the board 3 years ago before stepping down. Tom was a retired lawyer who knew his way around HOA law better than anyone in the community. He picked up on the second ring. "Marcus, what's up?" Tom's voice was cheerful, completely unaware of the bomb I was about to drop. "Tom, we have a serious problem. I am looking at our HOA insurance documents, and unless I am reading this completely wrong, we have not had liability coverage for 2 years. There was a long pause. That cannot be right. Send me what you are looking at. I scanned the documents and emailed them over. I could hear Tom typing on his computer, then a sharp intake of breath. Oh my God, Marcus, this is catastrophic. Do you understand what this means? I think so, but walk me through it. Tom's voice shifted into what I called his lawyer mode, crisp and serious. Every single homeowner in this community has been exposed to full personal liability for any incident that occurs on common property. If someone slips on the pool deck and breaks their neck, they can sue not just the HOA but every individual homeowner personally. If a tree falls on someone's car in the parking lot, same thing. If a child drowns in the community pool, we are all individually liable. Our personal assets, our homes, our savings, everything is at risk. My stomach dropped. How is this even possible? Do not we pay HOA dues specifically to cover things like insurance? Exactly. That is the question you need to be asking the board. Someone either dropped the ball catastrophically or something more sinister is going on. Who is currently on the board? Sharon Whitmore is president. She has been in that position for about 3 years now. Then there is Bill Hutchinson as treasurer, Karen Pennington as secretary, and 2 at-large members, David Kim and Patricia Morrison. Tom groaned at the mention of Sharon's name. Sharon Whitmore. That woman is a piece of work. She pushed me off the board because I kept asking too many questions about finances. Marcus, you need to bring this up immediately. Do not wait for that committee meeting. Every single day without insurance is another day of exposure. I thanked Tom and hung up, my mind racing. It was 7 in the evening on a Thursday. I pulled up the HOA directory and found Sharon Whitmore's phone number. My finger hovered over the call button. Should I go through official channels? Send an email? No, this was too urgent. I dialed. Sharon answered with the clipped, irritated tone of someone who did not like being contacted outside business hours. This is Sharon. Hi Sharon, this is Marcus Chen from Unit 42. I am sorry to call so late, but I have discovered something urgent in the documents you sent for the Finance Committee. Can this wait until the meeting? Her voice dripped with impatience. No, it really cannot. Sharon, our liability insurance policy lapsed 2 years ago. We are completely uninsured. Silence. Then, I do not know what you are looking at, but that is impossible. We have insurance. I am looking at a non-renewal notice dated April 15th, 2 years ago. There is no current policy in the folder you sent me. You must be confused. Let me check my records and I will get back to you. She hung up before I could respond. I sat there staring at my phone. Her reaction was all wrong. If I had just told her we had no insurance, her response should have been shock, maybe panic. Instead, she had been dismissive, almost defensive. Tom's words echoed in my head about something more sinister going on. 3 days passed with no response from Sharon. I sent 2 follow-up emails and left 1 voicemail. Nothing. That is when I decided to do some digging on my own. I filed a formal records request with the HOA, which under Arizona law they were required to fulfill within 10 business days. I requested all insurance policies for the past 3 years, all board meeting minutes, and all financial records showing premium payments. The request seemed to light a fire under Sharon. Within hours of submitting it, I received a terse email instructing me to attend an emergency board meeting the following evening. The email did not state the purpose of the meeting, but I knew exactly what it was about. I showed up at the community clubhouse 15 minutes early. Tom had agreed to come with me for moral support and legal backup. The board members were already there, huddled in conversation that stopped abruptly when we walked in. Sharon sat at the head of the table, her perfectly coiffed blonde hair and pantsuit making her look like she was about to chair a corporate board meeting rather than a homeowners association. Karen Pennington sat to her right, a pinched-faced woman in her early 50s who always seemed to be scowling about something. Bill Hutchinson, a heavy-set man with sweat stains already visible on his shirt despite the air conditioning, shuffled papers nervously. The other 2 board members looked uncomfortable. Marcus, Tom. Sharon nodded curtly. I was not aware Tom would be joining us. I invited him as a resident and former board member, I said calmly. Given the serious nature of what we need to discuss, I thought his legal expertise would be valuable. Sharon's jaw tightened. This is a board meeting. Non-board members need special permission to attend. Tom smiled politely. Actually, under Arizona Revised Statute 33-1804, all board meetings except executive sessions must be open to homeowners. You cannot exclude us unless you are discussing personnel, legal advice from your attorney, or reviewing another owner's records. Is this an executive session? No, Sharon said through gritted teeth. Please sit. We took seats in the front row of chairs set up for residents. Only a handful of other homeowners were there, probably curious about why an emergency meeting had been called. Sharon cleared her throat and began. We have called this meeting to address some concerns raised by Marcus Chen regarding our insurance coverage. I want to assure everyone that this community is properly insured and there is no cause for alarm. I stood up. Sharon, that is not accurate. Can you please share with everyone the current liability insurance policy for the HOA? Our insurance information is confidential. Tom stood beside me. No, it is not. Insurance policies are common records that any homeowner can inspect under Arizona HOA law. Marcus filed a proper records request, which you are legally obligated to fulfill. But let us make this simple. Just show everyone the current policy declarations page with proof that premiums are being paid. Bill Hutchinson was sweating more profusely now. He leaned over and whispered something to Sharon. She shook her head sharply. We are in the process of switching insurance carriers, Sharon announced. There may be a small gap in coverage, but it is being handled. A small gap. My voice rose despite my efforts to stay calm. Sharon, the policy lapsed 24 months ago. That is not a gap, that is complete negligence, and you just lied to everyone here by saying we are properly insured. The other homeowners started murmuring. A man in the back called out, Wait, are you saying we have no insurance at all? Sharon's face flushed red. This is not an appropriate forum for this discussion. Marcus, if you have concerns about HOA operations, you can file a formal complaint through the proper channels. I did file a formal request through proper channels, I shot back. You ignored it. You ignored my emails and my phone calls. Now I am raising this in a public meeting, which is absolutely my right as a homeowner. Every single person in this community needs to know that we are exposed to massive personal liability because this board failed to maintain insurance coverage. Karen Pennington finally spoke up, her voice sharp. How dare you come in here and make accusations? Do you have any idea how much work goes into running this HOA? We are all volunteers. Mistakes happen. Mistakes. Tom's lawyer voice came out in full force. If a tree fell tomorrow and killed someone on HOA property, every homeowner here could lose their house in the lawsuit. If a child drowned in that pool outside, we would all be personally liable. That is not a mistake. That is gross negligence at best and potentially criminal fraud if dues were collected under false pretenses. The room erupted. Homeowners were shouting questions at the board. David Kim, one of the at-large members, held up his hands for quiet. Okay, everyone calm down. Sharon, I think we need to address this head-on. I am as shocked as everyone else. I had no idea our insurance had lapsed. Can you please explain what happened? Sharon looked like she wanted to bolt from the room. Instead, she composed herself and spoke in a measured tone. 2 years ago, our insurance carrier dropped us because of multiple claims. Finding a new carrier for an HOA our size was extremely difficult. We have been working with a broker, but the premiums quoted were astronomical. We made the decision to self-insure temporarily while we explored other options. Who is we? I demanded. Did the entire board vote on this? Because that kind of decision should have been brought to the entire membership. Bill Hutchinson wiped his forehead with a handkerchief. It was just Sharon and me. We thought we could resolve it quickly without alarming everyone. You thought you could resolve a complete lack of insurance without telling anyone. Another homeowner stood up, a woman named Jennifer Park who lived 2 doors down from me. I am a real estate agent. Do you realize that technically every sale in this community for the past 2 years was fraudulent? Buyers are entitled to know the insurance status of the HOA. Their lenders required proof of adequate insurance. How was that provided? Sharon said nothing. Bill said nothing. The silence was damning. Tom leaned over to me and whispered, "They were forging insurance documents. That is fraud." My mind reeled at the implications. Sharon, when homeowners sold their properties, did you provide their buyers or their lenders with proof of HOA insurance? I provided the last policy we had on file, an expired policy. The buyers got what they needed to close their sales. The room exploded again. Multiple homeowners were on their feet now. One man, a lawyer himself, was already on his phone. Jennifer Park looked like she might be sick. Oh my God, I have closed 4 sales in this community in the past 2 years. I personally handed over insurance certificates to buyers. If those were fraudulent, I could lose my real estate license. Sharon, you have destroyed my career. Patricia Morrison, who had been silent until now, suddenly spoke up. I did not know about any of this. I joined the board only 8 months ago. Someone needs to call the police. No one is calling the police, Karen Pennington snapped. This is an internal HOA matter. It stopped being an internal matter when fraud was committed, Tom countered. Providing false insurance documents to facilitate real estate transactions is a crime. Collecting HOA dues while failing to provide contracted services is a crime. And exposing homeowners to massive liability through deliberate negligence could constitute reckless endangerment. Sharon stood up abruptly. This meeting is adjourned. You cannot adjourn a meeting just because you do not like where it is going, I said. We need answers. Where did the insurance premium money go? We are paying close to $300 per home per month in HOA dues. The budget clearly allocates $40,000 annually for insurance premiums. If that money was not going to insurance, where did it go? Bill Hutchinson looked at Sharon. Sharon looked at the door. The puzzle pieces were falling into place in my mind. You embezzled it. You collected dues earmarked for insurance and spent the money elsewhere. Where, Sharon? What was more important than protecting this community? I am not answering any more questions without a lawyer present, Sharon said coldly. Then I am calling the police. The man in the back who had been on his phone stepped forward. I am Detective James Walsh, Phoenix PD, and I am a resident of this community. I have just spoken to the Financial Crimes Unit. They will be very interested in this situation. Sharon Whitmore, Bill Hutchinson, I strongly suggest neither of you leave the jurisdiction until this matter is investigated. Sharon's face went pale. Karen Pennington started crying. Bill Hutchinson looked like he might pass out. The three other board members were frantically distancing themselves, claiming they had no knowledge of any impropriety. Detective Walsh took control of the situation. He instructed everyone to go home, but to document anything they knew about the insurance situation. He took statements from me, Tom, and several other homeowners. He secured the HOA office and told Sharon and Bill not to touch any records. I drove home in a daze. What had started as a routine document review had uncovered a scandal that would likely destroy several lives and potentially bankrupt many homeowners. I called my wife Sarah, who was out of town visiting her parents, and filled her in on everything. Marcus, we need to get our own lawyer, she said immediately. If the HOA gets sued, we need to protect our assets. She was right. The next morning, I contacted a litigation attorney named Rebecca Flores who specialized in HOA disputes. Her office was in downtown Phoenix, and she agreed to see me that afternoon. Rebecca was a sharp woman in her 40s with graying hair pulled back in a tight bun. Her office walls were covered with plaques and certificates, along with a few newspaper clippings about high-profile cases she had won. After I laid out the entire situation, she sat back in her chair and exhaled slowly. Marcus, this is one of the worst HOA catastrophes I have encountered, and I have seen some bad ones. Your exposure is significant. Every homeowner in Saguaro Hills is jointly and severally liable for anything that happens on common property. That means if there is a $1 million lawsuit, the plaintiff can go after any or all homeowners to collect the full amount. Can we sue the board members personally? Absolutely. They breached their fiduciary duty. The problem is, even if you win a judgment against them, they probably do not have enough personal assets to make you whole if a major claim happens. Your best bet is to immediately reinstate insurance, even if the premiums are high. Every day without coverage is Russian roulette. What about the fraud aspects? If they go to jail, does that help us? Rebecca shook her head. Criminal prosecution does not fix your civil liability problem. It might give you some satisfaction, but it would not protect you from lawsuits. You need to organize the homeowners, recall the entire board, and get new leadership in place immediately. Then you need to find emergency insurance coverage. I left her office with a list of action items. First, I needed to organize a special meeting to recall the board. Second, I needed to find an insurance broker who could help us. Third, I needed to assess the total financial damage and figure out where the missing money went. With Tom's help, I drafted a recall petition. Under Arizona law, we needed signatures from 20% of homeowners to trigger a special election. That meant 17 signatures. Within 48 hours, we had 43. People were terrified and angry. The momentum was building. 3 days after the explosive board meeting, Two detectives from the Phoenix Police Department Financial Crimes Unit showed up at the HOA office. They spent 8 hours going through records, seizing computers, and interviewing board members. I saw them escort Sharon and Bill out separately for questioning. Meanwhile, I contacted 5 different insurance brokers. 4 of them laughed when I explained the situation. The 5th, a weathered man named Gary Stevens who had been in the business for 30 years, agreed to try. "I am not going to sugarcoat this," Gary said over the phone. When an HOA goes bare for 2 years, carriers see it as a massive red flag. Your premiums are going to be astronomical, assuming I can even find someone willing to write the policy. And they are going to want to inspect every inch of the property first. If there are any safety violations, you will need to fix them before they will issue coverage. How astronomical are we talking? Normal rate for a community your size might be $40,000 to $50,000 a year. You are probably looking at $200,000 minimum, maybe more. And that is if we can find someone willing to take you. $200,000. That would require a massive special assessment on top of regular dues. I did the math. With 87 homes, that was about $2,300 per household. Many of our residents were retirees on fixed incomes. This would crush them financially. But what choice did we have? Gary promised to start making calls. In the meantime, I organized a town hall meeting for all homeowners. Tom helped me rent out a local community center that could accommodate everyone. We sent out notices via email, posted flyers around the neighborhood, and even went door to door to make sure everyone knew about it. The meeting was scheduled for a Saturday morning. When I arrived at the community center, I was stunned to see nearly every parking spot filled. Clearly, people were taking this seriously. Inside, folding chairs were packed with residents, many of whom I had never met despite living in the community for 6 years. The room buzzed with anxious conversations. I took the microphone and laid out everything I had learned. I walked through the timeline of the insurance lapse, the apparent fraud in providing false documents, the potential criminal charges, and the massive liability exposure we all faced. I explained the insurance quotes we were receiving and the likely special assessment that would be needed. By the time I finished, several people were crying. An elderly woman in the front row raised her hand. "I am on Social Security. I cannot afford an extra $2,000. What happens to me?" "If you cannot pay, the HOA can place a lien on your property," I said gently. "Eventually, they could even foreclose. I know that is terrifying, but the alternative is even worse. Without insurance, if someone gets seriously hurt on our property, you could lose your home to a lawsuit anyway." A middle-aged man stood up. "How do we know this is not just fear-mongering? Maybe we have been fined for 2 years without insurance. Maybe we will continue to be fine." Tom stood and addressed the crowd. "That is gambling with your family's future. Sure, maybe nothing happens, but all it takes is one incident. Let me give you a real example from a case I worked on years ago. An HOA in Temp let their insurance lapse for 6 months. During that time, a child drowned in the community pool. The parents sued for $10 million. The HOA had no insurance and no assets, so the family went after the individual homeowners. 36 families lost their homes, people declared bankruptcy, marriages ended, lives were destroyed. That is what you are risking. The room fell silent. The reality was sinking in. Jennifer Park, the real estate agent, stood up next. "I want everyone to know that I have contacted the Arizona Department of Real Estate. I am cooperating fully with their investigation. I have also contacted every buyer I represented in this community over the past 2 years to inform them of the situation. Several are considering legal action. This is going to get much worse before it gets better." A man in the back raised his hand. "What about going after Sharon and Bill personally? Can we sue them for everything they have?" "We can and we should," I said. But Rebecca Flores, the attorney I consulted, said that even if we win, they probably do not have enough personal wealth to cover the damages. Sharon is a real estate agent herself. Bill is a retired postal worker. They are not wealthy. We might get 100,000 out of them combined if we are lucky. That does not come close to covering the 200,000 we need for insurance, let alone any actual claims that might arise. "Where did the money go?" someone called out. "If they were not paying insurance premiums, where are those dues?" That was the question that had been haunting me. I had gotten partial access to HOA financial records through my finance committee role, but Sharon had been blocking my deeper investigation. However, Detective Walsh had seized everything, and he had agreed to share his findings with the homeowners once his investigation progressed. As if on cue, Detective Walsh entered the community center. He was in plain clothes but carried himself with unmistakable authority. He approached the microphone. "Folks, I cannot share everything due to the ongoing investigation, but I can tell you this much. We have found evidence that Sharon Whitmore and Bill Hutchinson diverted approximately $115,000 in HOA funds over a 2-year period. The money appears to have been used for personal expenses, including vacations, home renovations, and in Sharon's case, gambling debts." The room erupted in outrage. People were shouting, some were crying, others were calling for Sharon's head. Walsh held up his hands for quiet. "We are building a criminal case against both of them for fraud, embezzlement, and several other charges. They will face justice, but I need to be clear with all of you. Even when they are convicted, that does not solve your immediate problem. You need insurance now. The criminal justice system moves slowly. You cannot wait for restitution from a criminal case." After Walsh left, we spent another hour discussing next steps. We voted unanimously to recall the entire board. We established a temporary emergency committee consisting of me, Tom, Jennifer, Detective Walsh, and 3 other homeowners to handle immediate HOA business. We agreed to pursue the special assessment for insurance, and we authorized Rebecca Flores to file civil suits against Sharon, Bill, and Karen on behalf of the HOA. Over the next 2 weeks, things moved quickly. The recall election was held and all 5 board members were removed. Sharon and Bill were arrested and charged with multiple felonies. Karen Pennington, while not charged criminally, resigned in disgrace. The other 2 board members, who cooperated fully with investigators, were spared criminal charges but removed from the board nonetheless. Gary Stevens, our insurance broker, finally found a carrier willing to take us. The annual premium was $230,000 for basic liability coverage. It was highway robbery, but we had no choice. The special assessment was set at $2,600 per household, due within 30 days. The notices went out and the complaints poured in. Several homeowners claimed they could not pay. 2 threatened to sue the HOA over the assessment. 3 stopped paying their regular monthly dues in protest. It was chaos. I found myself spending 20 hours a week managing HOA crisis response while trying to maintain my regular job. Sarah was supportive, but exhausted from my constant stress. Tom was a godsend, handling the legal complexities and dealing with our attorney. Then, just when I thought things could not get worse, the incident I had been dreading occurred. A 10-year-old boy named Connor Michelson was playing near the community pool area. The pool had been drained for maintenance due to safety violations identified during the insurance inspection, but the gate lock was broken. Connor climbed the fence and fell into the empty pool, breaking his arm and suffering a concussion. Connor's parents rushed him to the hospital. Thankfully, his injuries were not life-threatening, but the medical bills were substantial. More importantly, the Michelsons had every right to sue. I visited them in the hospital the next day. Connor was sleeping, his arm in a cast. His parents, Michael and Lisa Michelson, looked exhausted and furious. "Marcus, how could this happen?" Lisa demanded. "That gate has been broken for months." We complained to Sharon 3 times. She kept saying it would be fixed. "I know, and I am so sorry," I said. "We are in the process of fixing everything." The new board is making safety our top priority, but I need to be honest with you. The HOA had no insurance when Connor was injured. We have coverage now, but it only started 3 days ago. Connor's accident happened 4 days ago. Michael's face went red. "So you are saying if we sue for medical bills, we would have to go after our neighbors individually?" "Yes. Or you could wait until we collect from Sharon and Bill, but that could take years." Lisa started crying. "We do not want to sue our neighbors. We just want Connor's medical bills paid." "This is so unfair." I agreed with her completely. It was unfair. These were good people who had done nothing wrong, and their son was hurt because of negligence that happened before most of us even knew there was a problem. Tom and I worked with Rebecca to find a solution. We negotiated directly with the Michelsons. The HOA would pay Connor's medical bills in installments, totaling about $35,000. In exchange, the Michelsons would sign a waiver agreeing not to sue. It was not ideal, but it was better than the alternative. To cover the payment, we had to levy another special assessment. Another $700 per household. People were furious, but what could they do? Meanwhile, Sharon and Bill's criminal cases proceeded through the courts. Sharon tried to make a deal, offering to testify against Bill in exchange for reduced charges. The prosecutor was not interested. The evidence was overwhelming against both of them. Karen Pennington, though not criminally charged, faced her own reckoning. Several homeowners filed a civil suit against her for negligence, arguing that, as secretary, she should have known about the insurance lapse and had a duty to report it. Karen hired a lawyer and tried to fight, but eventually settled for $50,000, which wiped out most of her savings. 6 months after I first discovered the lapsed insurance, Sharon and Bill stood before a judge for sentencing. I attended the hearing along with Tom and about 20 other homeowners. Sharon's lawyer argued for leniency, claiming she had gambling addiction issues and needed treatment, not prison. Bill's lawyer claimed he was merely following Sharon's lead and was himself a victim. The judge was not sympathetic. He sentenced Sharon to 4 years in prison and ordered restitution of $60,000. Bill received 3 years and was ordered to pay $55,000 in restitution. Both would have to pay additional fines and court costs. As I watched them being led away in handcuffs, I felt a mix of satisfaction and sadness. Justice was being served, but it did not fix the damage. Our community was still fractured. People were still financially struggling. Trust had been destroyed. The new HOA board worked tirelessly to rebuild. We implemented strict financial controls, including mandatory dual signatures on all checks, monthly financial reports distributed to all homeowners, and quarterly audits by an independent accountant. We established term limits for board members and required annual training on fiduciary duties. We also created a reserve fund for legal emergencies. The special assessments had been painful, but they taught us the importance of having cash reserves for unexpected crises. Gary Stevens worked with us throughout the first year, and when it came time to renew our insurance, he had better news. Our premiums dropped to $160,000 because we had a clean year with no claims and had fixed all the safety violations. It was still high, but more manageable. By year 3, we got down to $90,000. By year 5, we were back to normal market rates around $50,000 annually. The Michelsons remained in the community. Connor healed completely, and his parents forgave us. understanding that the new board was doing everything possible to make things right. They even joined the board themselves during year 2, bringing fresh perspectives and a passion for safety. Jennifer Park rebuilt her real estate career, though it took time. She became known as the agent who prioritized transparency and buyer protection. Ironically, her honesty about the HOA disaster actually attracted clients who appreciated her integrity. As for me, I served on the HOA board for 3 years before stepping down. The experience aged me considerably, but it also taught me the importance of civic engagement. I had been a passive homeowner for 6 years, assuming someone else was handling things properly. Never again. Tom continued as the community's unofficial legal advisor, though we eventually retained an actual HOA attorney on retainer. His guidance during those early crisis months had been invaluable, and the community owed him a debt of gratitude. The civil suits against Sharon, Bill, and Karen dragged on for years. Eventually, we recovered about $80,000 combined from their personal assets and homeowners' insurance policies. It was a fraction of what they had stolen or what their negligence had cost us, but it was something. The long-term impact on property values was significant. For about 2 years, homes in Saguaro Hills sold for 10 to 15% below comparable properties in neighboring communities. Buyers were wary, and who could blame them? But as word spread about the reforms we had implemented and the conservative financial management of the new board, confidence returned. By year 4, our property values had recovered. Several homeowners did end up losing their homes, unable to afford the special assessments combined with their regular mortgages. 3 families declared bankruptcy. 2 couples divorced, citing the financial stress as a contributing factor. These were real casualties that numbers could not capture. The experience also changed relationships within the community. Some neighbors grew closer, bonded by shared adversity. Others harbored resentments, blaming each other for not catching the problem sooner. Block parties became more common as people tried to rebuild community spirit. But there were always a few empty chairs from families who had moved away or stopped participating. One unexpected positive outcome was the level of engagement in HOA affairs. Before the crisis, board meetings might attract 5 homeowners if we were lucky. Afterward, we regularly had 30 or 40 attendees. People read the financial reports, they asked questions. They held us accountable. It was exhausting for board members, but it was also healthy. I often thought about what would have happened if I had not volunteered for that finance committee. How much longer would the insurance lapse have gone unnoticed? What if a more serious incident had occurred, like a drowning or a fire? The alternate timeline haunted me. The criminal restitution payments trickled in slowly as Sharon and Bill worked prison jobs paying pennies per hour. We would likely never see most of the money they were ordered to pay. Their prison sentences would end long before their restitution obligations were fulfilled. The justice system had punished them, but it had not made us whole. About 3 years after the initial discovery, I ran into Bill Hutchinson's wife at a grocery store. She had stayed in the community, living in their townhouse alone while Bill served his sentence. She looked older, worn down by shame and financial stress. We made eye contact, and for a moment I considered just walking past, but something made me stop. "Hello, Deanne," I said. She flinched, probably expecting anger. "Hello, Marcus. How are you holding up?" Her eyes filled with tears. "Not well, but I suppose I deserve it. You did not embezzle money, Bill did." I knew something was wrong. I should have asked more questions. I should have stopped him. She wiped her eyes with the back of her hand. "I am so sorry for what he did to everyone." I believed her. Deanne had been a victim too, in a different way. "Have you thought about selling and moving somewhere without so many reminders?" "I cannot afford to sell." We owe more on the mortgage than the house is worth after everything that happened. I am stuck here." We talked for a few more minutes. I learned that she was working 2 jobs to make ends meet, visiting Bill once a month in prison, and living with the constant judgment of neighbors. Before we parted, I did something that surprised even me. I invited her to the next HOA meeting. "We are planning a community garden project. We could use volunteers. It might help to be involved in something positive." She looked shocked. "You want me involved in HOA activities after what Bill did? You are not Bill, and this community is your home too. If you want to help rebuild it, we would welcome that." Deanne did show up to the next meeting. She volunteered for the garden project. Slowly, tentatively, she became part of the community again. Not everyone welcomed her, but enough people did. It was a small example of forgiveness and healing, something we desperately needed. The insurance crisis also prompted broader conversations about HOA governance across Arizona. Rebecca Flores used our case as an example in presentations to other HOAs and property managers. The state legislature considered new laws requiring more frequent audits and stricter oversight of HOA finances. While those laws never passed, the publicity around our situation made other communities more vigilant. I received emails from homeowners across the country who had discovered similar problems in their own communities. Some had boards covering up deferred maintenance. Others had embezzlement schemes. A few had the same insurance fraud we had experienced. I shared our story and the lessons we learned, hoping it might help others avoid the same nightmare. Looking back on those tumultuous years, I realized how fragile the systems we trust really are. We pay our HOA dues every month, assuming that responsible adults are managing that money properly. We trust that someone is checking the details, maintaining the insurance, following the rules. But trust without verification is just naivety. The experience made me a better accountant too. I became more skeptical, more willing to ask uncomfortable questions, more insistent on documentation and transparency. My clients appreciated it, even when it made them uncomfortable. Sarah and I ultimately decided to stay in Saguaro Hills. We had considered moving, especially during the worst of the crisis. But we had invested too much, both financially and emotionally, to walk away. Our home was worth fighting for, our community was worth rebuilding. The 10th anniversary of the insurance discovery was marked with a community event, oddly enough. Someone suggested we acknowledge how far we had come. We held a barbecue by the pool, that same pool where Connor had been injured all those years ago. The gate was now secure, monitored by cameras with multiple safety features. Connor, now a college student, attended with his parents. He made a joke about having the most expensive broken arm in HOA history. Sharon had been released from prison by then, having served her full sentence. She had moved out of state, and no one knew where she had gone. Bill was out too, living in a small apartment in Mesa, working as a custodian. He had stopped attending community events or showing his face in Saguaro Hills, though he still technically owned his property with Diane, who had never divorced him despite everything. Karen Pennington had also moved away, relocating to California to live with her daughter. The civil judgment had wrecked her financially, and she wanted a fresh start somewhere without the constant reminder of her failure. At the anniversary barbecue, Tom raised a glass for a toast. 10 years ago, this community faced its darkest hour. We were betrayed by people we trusted. We were exposed to risks that could have destroyed us all, but we came together. We fought back. We held wrongdoers accountable. We rebuilt better than before. That is something to be proud of. We all raised our glasses. As I looked around at the faces of my neighbors, I saw resilience. I saw people who had been knocked down but got back up. I saw a community that was stronger precisely because it had been tested. The financial wounds had healed. Property values were strong. Our reserve fund was healthy. Insurance was current and competitively priced. The board was well managed and transparent. We had implemented best practices that made us a model for other HOAs. But the emotional scars remained. Some people never fully trusted the HOA again, always suspicious, always questioning. Some relationships never recovered. Some homeowners carried resentment like a stone in their pocket, heavy and cold. I still thought about that moment when I first saw the lapsed insurance document. What if I had just ignored it? What if I had decided it was not my problem? The cascade of events that followed from that one decision to speak up was staggering. Sometimes I wondered if staying quiet would have been easier. But then I would see Connor throwing a football with his dad by that pool, alive and thriving. I would see new families moving into the community, confident in buying a home because of the transparency we now offered. I would see elderly residents who still had their homes because we had gotten insurance in place before catastrophe struck. Speaking up had been the right choice. It had been hard, exhausting, and sometimes painful, but it had been right. The HOA crisis taught me that vigilance is not paranoia. Asking questions is not troublemaking. Demanding accountability is not being difficult. These are the responsibilities that come with living in a community governed by shared rules and shared resources. I also learned that good people can make terrible choices. Sharon and Bill were not cartoonish villains. They were ordinary people who made bad decisions, told small lies that became big ones, and eventually found themselves in a hole too deep to climb out of. Their story was a cautionary tale about how easily ethical boundaries can erode when nobody is watching. The most important lesson, though, was about the power of community action. When I first discovered the insurance lapse, I felt helpless and overwhelmed. The problem was too big for one person. But when we organized, when we worked together, when we held each other up through the worst of it, we accomplished something remarkable. We took back control of our community. We created accountability where none had existed. We turned victims into survivors and survivors into advocates. Years later, I still served on various HOA committees, though never as president. I had learned that leadership came in many forms. Sometimes leadership meant being the person at the microphone making tough announcements. Sometimes it meant being the person behind the scenes checking the math and reading the fine print. Both were essential. New homeowners moving into Saguaro Hills would often hear the story of the insurance crisis, usually told with a mix of horror and pride. Horror at how bad things had gotten, and pride in how we had recovered. It became part of our community identity, a shared history that bonded us together. The empty space in the HOA office where Sharon's desk had once been was now occupied by our community manager, a professional we had hired to handle day-to-day operations. We had learned that running an HOA properly required expertise, not just volunteers with good intentions. The manager brought skills and accountability that made everything run smoother. Financial transparency became our calling card. Every month, detailed financial reports were posted online and emailed to every homeowner. Every quarter, we held open houses where residents could ask questions about any aspect of HOA operations. Every year, an independent audit was performed and the results shared publicly. We were probably overly cautious, but nobody complained. After what we had been through, people appreciated knowing exactly where their money went. The insurance broker Gary Stevens retired, but not before helping us establish relationships with multiple carriers. We never wanted to be dependent on a single insurer again. Competition kept rates reasonable and gave us leverage. Every renewal period, we solicited multiple bids and evaluated them carefully. The insurance line item in our budget was scrutinized more carefully than anything else. I thought often about the parallel universe where I had not volunteered for that finance committee. In that universe, maybe the insurance lapse went unnoticed for another year or 2 or 5. Maybe a major tragedy occurred. Maybe families were destroyed by lawsuits. Maybe the community collapsed entirely. I could not know for certain, but I was grateful we did not have to find out. My career as an accountant flourished in unexpected ways because of the HOA experience. I became known as the guy who uncovered a major fraud and helped rebuild a community. Other HOAs hired me as a consultant to review their financial practices. I caught several other instances of mismanagement and one case of outright embezzlement. Each time, I thought about how Sharon and Bill started down their path, and I tried to intervene before things went that far. Sarah eventually joined the HOA board herself, serving a term as treasurer. She brought a fresh perspective and a dedication to financial literacy, organizing workshops to help homeowners understand HOA budgets and financial reports. Educated homeowners were engaged homeowners, and engaged homeowners held their boards accountable. Connor Michelson graduated college and moved away, but he came back to visit his parents regularly. Each time I saw him, I was reminded of how close we had come to a much worse outcome. His injury had been terrible, but it had happened just days before insurance kicked in. If it had been weeks or months earlier, during the heat of the crisis when we had no coverage and no cash reserves, the outcome could have been devastating for everyone involved. The final chapter of Sharon and Bill's legal saga came almost 12 years after the initial discovery. A civil judgment against them had remained outstanding, accumulating interest. Sharon, now working a modest job in Nevada, had her wages garnished monthly. Bill, still living in Arizona, was also making small payments. Neither would ever pay off their full obligation, but the garnishments would continue for the rest of their working lives. It was a form of justice, albeit an incomplete one. The community moved forward, scarred but stronger. New traditions replaced old ones. The community garden that Deanne had helped establish flourished, producing vegetables that residents shared. A neighborhood watch program made everyone feel safer. Annual elections were competitive, with multiple qualified candidates running for each board position. Apathy had been replaced by engagement. I never regretted reading those documents carefully that evening so many years ago. I never regretted making those phone calls, asking those hard questions, or standing up at that board meeting. Yes, it had turned my life upside down for several years. Yes, it had cost me sleep, stress, and countless hours of work, but it had also saved my community. As I sat on my back patio, looking out at the Saguaro Hills community I had fought so hard to protect, I felt a deep sense of satisfaction. This was more than just a place where I owned property. It was home. It was a community of people who had been through fire together and emerged stronger. It was proof that ordinary people, when faced with extraordinary challenges, could rise to the occasion. The insurance documents were still filed away in my home office, a reminder of where it all started. Sometimes I pulled them out and looked at that red, non-renewed stamp. It had been a warning, a call to action that I had been fortunate enough to notice. How many other communities had similar time bombs ticking away, unnoticed until it was too late? I made it my mission to spread awareness. I wrote articles for HOA magazines. I spoke at community meetings across the state. I shared our story not to embarrass anyone or to relive the trauma, but to prevent others from experiencing the same crisis. If even one community avoided disaster because they heard what happened to us and decided to audit their own insurance, then all the stress had been worth it. The greatest victory was not in the criminal convictions or the recovered money or even the restored property values. The greatest victory was in the changed culture. Saguaro Hills had transformed from a passive community where residents paid their dues and assumed everything was fine, to an engaged community where residents asked questions and demanded accountability. That cultural shift was Sharon and Bill's true legacy, though certainly not the one they had intended. As the sun set over the Arizona desert, casting long shadows across the community I had helped save, I thought about the fragility of trust and the strength of community. Both lessons were important. Trust should be given carefully and verified regularly. But when trust is broken, community can rebuild it through transparency, accountability, and shared purpose. My phone buzzed with a reminder about tomorrow's HOA board meeting. Even after all these years, I still attended regularly. Not because I had to, but because I wanted to. Because vigilance was the price of security. Because my home, my investment, and my community deserved my attention. I picked up the agenda for tomorrow's meeting. Standard stuff: landscaping proposals, pool maintenance updates, budget review. Boring, routine, mundane business. And that was exactly how it should be. After years of crisis and drama, boring was beautiful. Routine was reassuring. Mundane meant nothing was catastrophically wrong, but I would still read every line of every document. I would still ask questions if something seemed off. I would still verify instead of just trusting. Because I had learned the hard way what could happen when nobody was paying attention. The lights came on automatically throughout the community as darkness fell. The pool area glowed invitingly, safe and properly maintained. The common areas were clean and well kept. Everything looked normal, peaceful, secure. And this time it actually was. The insurance was current, the finances were sound, the board was honest and transparent. This was what HOA governance should look like. It had taken a disaster to get here, but we had arrived. And I would do everything in my power to make sure we never went back to those dark days of exposure and vulnerability. Tomorrow, I would attend that board meeting. I would review those documents. I would ask my questions. And I would go home knowing that my community was protected, my neighbors were safe, and the nightmare of the lapsed insurance was truly behind us. That knowledge, hard-won and dearly paid for, was worth every moment of struggle. The HOA crisis had defined a chapter of my life, but it did not define me. I was Marcus Chen, accountant, husband, homeowner, and engaged citizen. I had discovered a fraud, exposed corruption, and helped rebuild a community. Not bad for a guy who just wanted to volunteer for a finance committee.